Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome an accomplished entrepreneur, venture capital leader from Tel Aviv, Israel, Mr. Shahar Botzer. Shahar, welcome to the show.
Hi, thank you for having me, Atish.
Thank you. Shahar is the co-founder and managing partner of Good Company VC, which is a mission-driven early-stage VC fund. So Shahar, before we talk to you about VC, tell me a little bit about your own journey and what was the inspiration to focus on early-stage ventures?
Yeah, so I'm 42. I'll start with an Israeli introduction. It's always first the family.
Okay,
So I'm a father of 4 kids,
wonderful.
and I have a disability. I'm sitting on a wheelchair. I have a muscular dystrophy that doesn't deteriorate, but I've been always mobilized on wheelchair. And at very early age, Israel, when I was a kid, Israel wasn't accessible, and I found myself without any choice for filing an appeal to the Supreme Court in Israel, asking for the state to make my school and the district where I lived in accessible. So that's why it's the first time in my life that I saw I encounter a big problem, and I tried to solve it. And it succeeded, and there was a legal precedent on my name, and many Israeli kids who entered the regular system afterwards. In a way, since then, I see myself as a change maker. And this is my passion. And we can speak about my career, but I did a few micro careers in a few areas. And at the end of the day, I understood that the most significant space that is also involved with what I think is my talent is tech, and the chance to move the needle for the better and create massive change in the world is using technology. So I decided that that's where I want to be. And because I'm not good enough doing it myself, I thought I might as well be an investor and a mentor and help people with my operational background.
Amazing. And that's how the Good Company VC was founded.
Yeah, actually, Good Company is the intersection between me and Ido, my partner. Ido Fisher, that he comes from tech, and he comes from mainstream VC space. And I come from finance, and I come from more like the impact investing way of thinking originally. That's not where I am now. We can speak about that later also.
Very interesting.
And that's like the intersection between us and that's what created the company.
Fantastic. Thank you. And Shahar, how do you identify promising early stage startups for investment?
So we have a bit, I think, a bit different approach, because we are not technology driven. We see technology as a mean to an end. We are more problem focused, trying to do a kind of a reverse engineering for VC. So we specialize in a few spaces where we are very proactive, which are climate. And under climate, there is agriculture, supply chain, and energy, digital health, and education. And in those sectors, we have corporate partners that we study, global corporate partners that we study with them, and also with later stage VCs that specialize in those spaces. We always educate ourselves about what are the biggest problems for humanity for the next 2 decades. And once we find a problem that we are very passionate about, we go and proactively look for Israeli founders globally, not only in Israel, that are trying to tackle those issues. And then we study their solution and check if this solution is the best solution for the specific problem. So more like problem looking for technology and not technology looking for a problem.
Great response. And, based on all the experience you have as an investor, what in your opinion, are some of the common mistakes a lot of early stage founders make when they make a pitch to you?
Yeah, so I think many founders miss to understand, and it's part of the work that we do when we invest in the pre-seed. Two things. One is that bringing an investor, a VC investor, especially in the early stage, is actually like adding another co-founder, and you need to create the relationship. It's better to create a long-term relationship and not just come and expect that the process will take 2 months since you knew each other, and unless it's really the pre-seed, but even then we try to meet them in advance. The second thing is understanding your product market fit, which means don't just meet any VC that you can meet. Do the work before, understand who are the relevant investors in terms of stage, in terms of their check size that they usually put, in terms of the industry, in terms of the specific technology. If you were doing a device, are they doing devices? Are they doing only software? And try to minimize the amount of meetings, but maximize the amount of relevant meetings. And I feel that many of them are like meeting too many investors and also getting too many advices in this process.
Very interesting. And one of the things that I have often seen with startup investors, founders, is that once they receive money, the money runs out very quickly. So in your experience, what are some of the major obstacles startups encounter after they receive the money?
It's like 90% of the cases, the work that we do with startups, not after the pre-seed, after the second round, when we succeed with them to bring the seed round, is trying to prevent them from hiring too many people too fast, and making sure that because usually what you do is you start with your sales organization, and usually it's not in Israel, the sales organization is in the target market, in the US usually. And then it's extremely important to make sure that you hire people and not too quick. Make sure every person that joins the team knows his KPI, knows the company KPI, also building the organizational culture properly. And usually what happens is they hire too many people. Nobody knows what he's supposed to do. 50% of them get fired after 6 months, and it just completely ruins the burn rate.
And Shahar, what are some key differences between pre-seed and seed investments?
So I think those terms became a bit irrelevant since 2021. It's more relevant on how much did you raise so far, because every VC calls it different. Usually pre-seed small funds like us or angels, that what they look for is the team, mostly make sure it's a big problem and that the product that you're planning or just started to build is a relevant one. There's not many validations. Most of the due diligence will be on the team and on the problem, understanding that is it a big problem? Are the customers used to buy this kind of technology in this way? And the KPI for the next round, for the seed round, will be like, show us a few customers, not too many. Let's understand the unit economics. Let's understand how are you planning to expand? How are you going to get to the $1 million KPI for A, or today it's even more than $1 million. So I think it's a bit different. In the seed round, you already expected to show numbers and not only like present the problem in the team.
Well said. And how important is the concept of a mission-driven company in today's startup ecosystem?
So we actually see it as a business criteria for us from a few perspectives. One is that we feel that when you're mission-driven, it means like you solve a massive problem for humanity, and you usually will build something that is a must-have and not nice to have. Second thing is you're more resilient for downturns, because if you solve something in energy, in food supply, in education, those are spaces that in 2022, when the markets went down, our portfolio didn't experience any lack of customers in any way or demand. And the third thing, and I think that's the most important, when the founding team and the first employees are extremely passionate about the problem they solve, and they have a very good explanation for themselves and for their families. Why are they doing this crazy thing, working 24 hours, trying to solve a massive global problem? They will probably be more resilient when it will get hard. And even the most famous stories about success had many moments that it looks like it's not going to happen, and the founding team needs to be resilient. And for us as a pre-seed investors, we see it as an advantage.
Correct. And how important is mentorship for early stage startups? And how do you support your investee companies with mentorship?
Yeah, so we are very hands-on, at least in the first part of the relationship, until we get the second round, the seed round. Usually we are involved with them after the A round, but it's more a matter of building the relationship with the founders. Our focus is on a few things. One is making sure that at all time the fundable KPI is validated, that we spoke with the market, with the next funds that we want them to invest in the next round, and validated with them what is the fundable KPI, and that the company, from the founders to the last employee, knows what are we working on. So focus. Second thing is building the corporate culture properly. And the third thing is building the governance, having board meetings, the processes in the company, so we will be ready for next round. The other thing is building relationships, like I said in the beginning, with those VCs that we want, like our wish list for next round, and helping the founders build the relationships, the personal relationships with the managing partners.
And since you spoke about governance, my next question is about governance. What are some of the critical components of good governance that a lot of early stage startups tend to overlook?
So I think in the beginning, you don't have many employees. You're just building the product. It's from one end, you don't have a lot of things to measure. The measurement is not that important. Our focus is more on building the culture of the company, making sure that every employee that joins understand what is the corporate culture that we are trying to build together, and making sure, of course, that the way that the employees are treated is above what's the minimum needed, and like walking the talk, especially that it's a mission-driven company trying to solve a massive problem. I think it's more like building the DNA and the building blocks for the future. Most of the work on governance started in like more methodology way, or after the A round, when you have like a few dozens of employees, you have an head of HR, and you can start doing the measurements.
And how involved are you in the governance of the early stage companies?
So we're involved as a board member, but I must say that my personal experience of doing early stage is that the most important thing in early stage between pre-seed to A round is focus and keeping your eyes on the target. The mission of building a product and then finding the product market fit is so hard.
Right.
that we're trying not to waste the founder's time on things that are not must-have.
And how important is social impact along with financial return in your investment decisions?
So we actually don't see it as a separate things. We don't look at our business as a double bottom line in any way. What's connected between the whole team, me and Nido at start, and then also Arno and Nick, they joined us is the understanding that the best impactful, meaningful, mission-driven, as we call it, a startup that can be created in the next 2 decades are the ones that their product is solving a massive problem in the world. So in that way, if we invested, for example, in Bee Hero, and they save bees by using IoT and machine learning, and the only way to make more money and the only way to scale is to save bees, and by that promising 100% pollination in the field. So the impact or the mission is embedded in the business.
And given the fact that you put your money into so many companies, my next question, Shahar, is what are some of the common exit routes to look for? And at what stage do you look for an exit?
So we're managing a relatively small funds, around $30 million, starting at the pre-seed, very early stage, and low valuations when we entered. Excuse me. And from that perspective, we are more agile, and sometimes we sell part of our holdings, even in the B round, C round, but we're looking for massive scale companies that can go all the way to IPO or an exit. The routes are a bit different between the fields, so it depends if you invest in the energy space or agriculture or digital health or education. It's not all the same, but let's say we're trying to build companies, not to build exits. We're very focused on the unit economics and creating profitable growth as much as possible. The plan is going all the way to IPO with the company. But if there are exits along the way, and we are trying to help them to create those relationships in advance, so it's usually either private equities, again, it depends on the market, strategic partners. So even sometimes it's a strategic that became a strategic customer in the beginning, or it can be a strategic player that invested in the company, a small amount, or the tech giants. And that is more relevant in areas where there is a data play that they are looking into. So if it's something that can be interesting in the future for Google, for Facebook, Amazon, etc.
Fascinating. I have time for 2 more questions for you. How do you ensure that startups are on a path to a successful exit from the early stages?
That's a very good question, because at the end of the day, the difference between a good VC and a bad VC is the ones that can recognize within the portfolio they already made who are the winners and double down on them. So that's like the most hard task within this profession. We see it as a company that reach the fundable KPI that we agreed on again and again. So we agreed what is the fundable KPI for seed. They reached that goal, then they brought good investors, so also bringing good partners to the table that we trust. So reaching fundable KPIs again and again, bringing good partners, and the way they hire and the way that they maintain talent is also a big mark for us if they succeed, to bring very successful people to the company and give them the space to grow. It's a very big change between the seed round and after the A round. The founders need to let go and needs to create a company they're not involved in all of the processes. And that's also something that we look in.
Wonderful. And my last question for you, Shahar. Can you share any success stories from your portfolio that demonstrate the potential of early stage investments?
Sure. So I mentioned already Be Hero, that they got investment from Rabobank and others, and they're already the largest pollination provider in the US and expanding to Australia and other continents. We also invested the first check in a company called Healthy, with a double E at the end, that help employees in the US understand their medical benefits and medical insurance and make sure that they use their medical rights and keep themselves more healthy. So we did the first check in the company, and they're already worth over $100 million. Got investment from few global VCs and TriNet, which is a strategic, by the way, an example of what we spoke about. And another company is Tulu, that we also did the pre-seed there. And what they do is they send to landlords in actually Europe and the US, and they create in every lobby of a big building a panel that you have all the amenities that you used to own. So think about vacuum cleaners, printers, and toolbox, whatever you need to use, you can use pay by the hour. And that creates a massive environment of a shared economy kind of way, mission. And they're already in thousands of buildings and also bringing a lot of insights from the usage. It's another company that did a few rounds since we invested and looking very positive.
Wonderful. And on that note, Shahar, I just want to say thank you so much for speaking to me about your own journey. Thank you for speaking to me on so many different aspects of early stage venture investing. I mean, we covered a lot of ground on the challenges that VCs face or the mistakes people make. What are the challenges when it comes to governance? How important is mentorship? I loved how you talked to me about the mission-driven company and how important that is for you. Thank you also for telling us the difference between pre-seed and seed investments. Thank you for speaking to me, and good luck to you.
Thank you for having me.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.